Is the US dollar about to resume lower? Hello traders, Fawad Razak Zara here, market analyst with City Index. Let's get into it. The US dollar has been bouncing back in the last few days on the back of Trump's decision to nominate Kevin Walsh as the person to replace Jerome Powell at the Fed. And we've also had some economic data from the US, which have been decent, if not spectacular. Today, however, we've had some weaker than expected data, and that has caused the US dollar to ease off a little bit, raising the possibility that the dollar yen may be about to top out around current levels. Let's quickly have a look at the economic calendar, and the main one was the Challenger job cuts, which jumped by 117%, which was a massive increase in January, and it doesn't bode well for the employment in the US. Weak employment means more rate cuts could be on the way from the Fed, and that's a key takeaway point. We did have a few other economic indicators today that were also weaker than expected, for example, the unemployment claims. But claims have been not too bad relative to expectations in the past. So are we going to see another drop now that rates have come back to retest the area of price support? Well, that's a key question. We have a Fib confidence here as well. I think it's the 61.8 Fibonacci retrace against the most recent high. Yeah, we've just gone past the 61. So it's between the 61.8 to 78.6% Fibonacci level there. In addition, you have the low from this candle that was taken out during that big sell-off. That level was almost retested from underneath earlier today before rates came under a bit of pressure. Zooming into the hourly time frame, you can see this low right here, and that level has turned into resistance, nearly marking the high for the day. We've seen a decent drop from there, so it's possible that the trend has potentially resumed lower from there. And as I speak, some news has just come out and caused the US dollar to weaken a little bit further on the day. But I was going to highlight this area of price action as being the next resistance on an intraday basis, because this was the last resistance prior to price breaking out of it, hitting that resistance and then dropping below it, and now it's being tested, turning into a bit of resistance. So price action is certainly looking bearish on an intraday basis, but going back to the daily time frame, you can see that in the last few days anyway, it's been going up, but has the trend started to turn lower once again is the key question. Now then, we had the Bank of England rate decision today, which was quite unexpected in the sense that the Bank of England officials narrowly decided to keep rates unchanged in a 5-4 vote. 4 members dissented, asking for a rate cut. But the split was quite surprising, given that markets were expecting only 2 members to vote for a rate cut at this particular meeting. In addition to that, the Bank of England revised its GDP lower, inflation lower. And that's kind of caused the markets to sell the pound in the view that the Bank of England could be cutting interest rates sooner than expected, possibly in March and again in June. And that came as real surprise to the market, causing the pound to slump across the board. Now against the euro, it looks like it's kind of breaking out from this channel. If I plot another one here, you can see it was stuck in a bearish channel, but notice how price found support right at the 200-day moving average in recent days. Although it did break below it, it was quick to reclaim it at 86.50. That level is very important. That needs to hold now to keep this trend intact. So from here, the euro pound could be heading above this high initially at 87.45. And then the next upside target will be liquidity resting above 87.97. So call that 88 handle. And then ultimately, the objective is to reach the prior swing high at 88.65. Those are the next upside targets. On the downside, that purple level at 86.50 is the key level of support to hold now, where we have the 200-day moving average converging. If we see the euro pound go below today's low in the coming days at 86.40, that would be a clear reversal sign in that the bullish breakout has clearly failed. So at that point, should we cross it, you'd have to drop any bullish buys you have on the euro pound. For more market updates and insights, head over to City Index. I'll see you in the next one. Take care.